there, welcome back to Weenie Trades. And in this video, we're going to be going over the Sunday game plan. In this video, I'm going to be going over the ETFs. I'm going to be giving an ETF breakdown and then a quick few potential trade setups. So, holiday market might be coming on up. Towards the end of the year, we might see a little bit of chop. So a little bit of chop, maybe a little bit of a float. And so I'm going to be breaking down the SPY. Why do I break down the SPY? Because I like to. So let's get right into the video. SPY, this week, we've got a big expected move of $8.50. Boy, that's a huge expected move. And, I don't know if we're going to be, $8.50 higher. That would put SPY at about $4.79 towards the upside. And on the downside, that would put SPY at about $4.61. That's a pretty big range. I think we might stay inside that range. So I might be looking to sell bear call credit spreads if we get it too high up, or I might sell bull put credit spreads if we get too far down. So that's kind of my game plan strategy for the SPY. Of course, we got a little flag pattern that could break bullishly. We'll see. That would be over Friday's high. The market did close pretty bullishly Friday and is running up into the weekend, which, by the way, hope you all had an amazing weekend. I know I had a great weekend. I was skiing a lot. I swam today. Boy, it's always good to get outside and see different things and go through different experiences over time. That's for sure. So, SPY, big expected move, looking to revert back to the mean. Mean reversion strategies have been working very well, so keep an eye on that for the SPY. Similar thing with the Qs. Qs, by the way, SPY and the Qs, I'm still leaning slightly bullish. We probably go a little bit higher based on what I'm seeing right now. The Qs, though, big expected move, $10 expected move for the Qs. So, that would put, the Qs right matching through at about all-time highs. Or, on the downside, 388 or 388 on the downside. That's about here. That's halfway in the middle of this big gap. So pretty interesting on the Qs. I do think that the Qs are going to be a little bit relatively weak. However, we're still in a bull market, so the Qs are probably just going to grind on upward. Next up we got is the financials. And the financials over here, I'm just going to clear the drawing set. Financials might take the lead. We'll see if this is also another bull flag that can pop to the upside. Real quick, if we check the expected move for the week, expected move is only $1. See, on the financials, I think that's, even though it's a smaller product, that puts the financials XLF at about 40 or maybe down at 38. I guess that's about reasonable. I think that the options market on the financials is about fair priced. I think that implied volatility might have gotten sucked out just a little bit with it going sideways just a little bit more. So the financials might see a little bit relative strength, might get rotated into. So keep an eye out on the XLF. Next up we got is the IWM, and the IWM, we got that kind of bounce, that 225, 226 as we talked about last week, oversold into support. We get a kickback rally, but IWM is much more weak compared to the other markets. So IWM, probably goes sideways to slightly lower. Of course, if the overall SPY and Qs are ripping, IWM will probably grind higher. But if you're into that sort of thing of hedging, where say I have a lot of tech stocks or something like that, or maybe I've got a lot of bank stocks, or maybe I'm just in a long position, what I could do is you could short the IWM, and if your trade plays out, your trade pays, but you maybe take a smaller loss on the IWM short. But if the market tanks, you make bank on the IWM short, but on your long trade, you lose money. So definitely potentially a thing to do pairs trading with. I don't do that too much, but sometimes it's nice to just have a little bit of a hedge in the background so I can really press that risk on that trade that I want. That's the IWM. Let's check out the semiconductors, SMH. SMH, just consolidating up here. Semiconductors probably go sideways. They're a little bit up here, so even if we pull back just a little bit, as long as the SMH ETF, is above 300, that's about the gap, should be pretty bullish. I do think that would even be a potential dip buy on the SMH. Otherwise, looking for the SMH to go sideways. I don't know if we break out, because I'm going to quickly break down NVIDIA over here. NVIDIA, just a little bit top heavy if you ask me. Again, like I said, I'm a seller of NVIDIA at about the 330 area. I don't think it, risk to reward says, let's pull back a little bit. Let's grab that juicy dip buy, not the up here. Everybody's talking about NVIDIA up here. It's like, Why aren't you talking about NVIDIA down here? Why aren't you talking about NVIDIA down here like we were at Weenie Trades? That's the time to be getting excited during those boring consolidation periods before they take liftoff. So now we've already liftoff. Yeah, same thing. Sideways to slightly lower in NVIDIA. AMD, same thing. I said AMD, I'm a seller on AMD at about 150. Of course, I can't nail the top. You know, it goes as high as 164, but everybody's talking about AMD. They're like talking about their AMD calls, and then they say, oh crap, my AMD calls are done. Well, yeah, because it's, you know, gone so far up. But now AMD looks a little bit more interesting. You know, we made a low. Yeah, a little bit of weakness, if you ask me, on AMD. Still looking at this buy zone right down here at about 128 down to 125. So if AMD is finding that hot and heavy selling early in the week, could be a potential dip buy if we start to find some stability, or even take it for a swing trade. Maybe grab a little bit of equity for the investment accounts. But otherwise, AMD, you know, I'm not really bearish. You know, we've already gotten that drop from the overextension. So maybe we just go sideways a little bit, maybe sideways to slightly lower. Might take a long time to curl. And the reason I was selling AMD up here at the 150s area was the option chain. Option chain was basically saying, yeah, AMD is not likely to close the year above 160, but we were likely to touch it at 160. So a quick little options tip. If you're looking at the options chain, and there's like something as like a delta of like 0.4, well, the probability of that touching is somewhere around 80%. You know, if there's a 40% chance that it closes in the money, just double that, and then you have that probability that at some point in time, we touch that level. So pretty cool. It's accurate, I would say, 80% of the time. 80-20 rule, the options market is accurate the majority of the time. Sometimes, though, it's a little bit off, and that's where we have those crazy outsized and weird moves. So semiconductors, neutral / slightly bearish, but we'll reevaluate that live. VIX over here, good pop, and then we just give it all back. You know, the VIX loves to give back all the fear. They get everybody riled up and then drop it on them. So VIX, same thing, probably just fizzles out, goes sideways to slightly lower. And that was, you know, it gave it up pretty aggressively. I was expecting just a little bit more of a grind, but there's probably too many shorts in the market. And yes, the VIX is not the inverse to the overall market, but it can be, there is certainly a negative correlation between VIX and the SPY. So SPY, decent rally. It's as if fear just disappeared overnight. So fear, expecting that to go sideways to slightly lower. Keep an eye on that volatility. So that's the ETF overview. Next, real quick, I'm going to be going into the trade setups. So first up we got is Blackberry, and this is just to eyeball. I'm not telling you guys to buy or sell any of these securities. These are just, I might not even do it, but I'm just looking at these trends in Blackberry. Pump and dump, pump, dump, pump, dump, zigzag into nothing. We got a last pump, and now we're starting to really break down. You know, we do have earnings coming on up, which is on the, let's see over here, the 21st. So this week, I think Blackberry goes sideways to slightly lower, especially if we eclipse Friday's low. So Blackberry short underneath, I call it 8.69. And then you might just want to trail down your stop on that short trade. You could grab put options. I would say maybe in-out put spreads might be the way to go, because that way you aren't at risk if it just chops around. You can still make money even if it chops around. So that is Blackberry. Next up we got is Tesla, and Tesla really correcting through price, through time, I should say. It's correcting its price through time. And so Tesla, big parabolic move, boom, you know, we take some profits in the 1200s. We get a nice good 15% drop. Tesla really got a good V bounce though from that low, higher low, lower high, lower low. So potential little downtrend, a lower high. It found a little bit of support on Friday. The thing is, though, you know, I still have an arrow that says sideways. So we might go sideways for a bit, but Tesla, if we undo this hammer candle right here on this day on Friday, that's underneath about, call it 980. I think Tesla is a short underneath 980, and you could take that short probably down to 900 and maybe even as low as 880. I do think that that could be a potential dip buy long term. I'll have to reevaluate that. I'm a Tesla bull, but also I'm a reasonable man. So Tesla short underneath, 980. I think you can get a pretty good drop and a pretty good unwind. Tesla, whenever it goes vertical, likes to unwind a lot of it and then go back on a normal, slower, choppier trend. So that is a potential scenario for Tesla. Next up we got is Facebook, FB. Same thing, a short setup. I don't have usually this many short setups in the weekly game plan, but I was kind of looking at these and like, yeah, things drop a little bit faster than they go up. I like that. I like making quick money fast, but whenever there comes with quick money, you got to be careful, you got to be disciplined, you got to be a sniper, and you've got to be ready for it. So Facebook, short setup, high, low, lower high, lower low. We had a little bit of a new trend that failed, and now we're snapback, kickback rally into resistance, and we saw a little bit of weakness on Friday. Now, I think you could probably short Facebook underneath Friday's low, 326, and maybe just take it down just a little bit of this range, maybe down to 320, maybe as low as 315. I don't know if Facebook goes much lower than 315, though. I was really looking for the dip buy at about the 280 area, 280 on Facebook, but we just never got that low. So Facebook, I'm just looking for a little bit of a pullback, and then from there, we could probably bounce, or we could do something like this and resume a new downtrend. So those are the scenarios, but the short setup starts underneath Friday's low on Facebook. Next up we got is Goldman Sachs, GS, and we were talking about the banking sector potentially being a leader. And right here we have this short little downtrend. And what happens is, if we can break this confluence of the downtrend, call it 400, Goldman Sachs, I like to go long through 400, and maybe even for a longer term position trade, since it does pay $2 per share of a dividend. That's a pretty good yield. That's a pretty good yield, a pretty good return. I like that. That looks pretty cool to me. So keeping an eye out on Goldman Sachs over 400. Oh, and be sure to check out the quizzes in the course. Here's an example of one. Here's a cool question. Butterflies are similar to ... all of the above, which is pinning a smaller range with a high payout, a covered call to a long call as a credit spread to a debit spread, and then lastly, other insects and arachnids. So obviously the answer is all of the above. So tell me your quiz scores, check them out. First link in the description. See ya.